Welcome back to Kings and Queens accounting class. We are on the second phase of the manufacturing account. We have spent the time earlier in our previous lesson to look at the concepts relating to manufacturing account and to provide some simplified explanation of these concepts, as well as we have showed you how to prepare a manufacturing account. At this time, we're going to use the question here presented to now prepare the manufacturing account as well as the income statement, right? So we're going to do two things at this time. We're going to do the manufacturing account and the income statement. So let us get on with the work. All right, so we're going to be ruling up for the manufacturing account. So now that we have ruled up the manufacturing account, we're going to be proceeding to transfer information from this question to the manufacturing account. I said in our last lesson that in dealing with the manufacturing account, there are at least three elements that you would be required to do in the manufacturing account, are three areas. All right, one has to do with the direct costs, and the other is indirect costs. And the third has to do with working in progress, if it is in the question. So direct costs, then indirect costs, then work in progress. Let's proceed based on the question. All right, we were not given any item to find cost of raw material consumed because they have already given that to us. All right, so we did not need to do opening stock of raw material plus the purchases of raw material less closing stock of raw material. We didn't have to do all of that because in this question it's already done. So we're going to enter it, cost of raw material consumed. All right, and that is 36,400. Our next move now is to find the other element, there are three elements that we look for in the question to find our prime cost or direct cost. The raw materials, the factory wages, yes, or the direct wages, and the factory or direct expenses. All right, so we have used this and we are seeing salaries for office staff. Do we use that? No, that's not a direct cost. Wages for bakers, yes, because the business is what? Cake Baking Limited, so direct wages would be for the bakers. So wages for bakers, and that figure is 15,800. All right, we check now. We'll look to see if there's any direct expense. No, there are no other direct expense. So we're going to just add these two elements to get our prime cost. All right. So this would be 52,200 to be our prime cost. All right. Our next move, having found the prime cost, is to go to deal with our factory overhead. So all right, factory overhead, those are the other expenses relating to the factory. So let's go. we have overhead cost, that is our fixed asset. Okay, we're not using that. Provision for depreciation for oven, yes, we're going to deal with that, but that is this one is the accumulative depreciation. All right, this figure is the accumulative depreciation. For in the note they indicate that the oven is to be depreciated at 10%, yes, 10% on the reducing balance method. So we're going to work that out. Let's work out how we're going to do that now. Remember, when we are doing reducing balance method, finding depreciation using the reducing balance method, it is after the first year, we are calculating the percentage on the book value. Now, book value, to find the book value, it is the cost minus the depreciation to give us the book value. Now, what is the cost of the oven? The cost of the oven is 16,000. The accumulative depreciation on oven is 7,200. When I subtract this from this, I'm going to get the book value. All right? So it should be 008. Yes? All right, so we take that it's going to be 15. 7 from 15 will give us what? 8 again? 8. Now, am I right? I think so. I'm right. Good. So, this is the book value. And the next thing now to do is to apply the percentage now. They said that oven depreciation is at 10% and we're using the reducing balance method. And I've just said earlier, when we're doing reducing balance method for depreciation, after the first year we use the book value. So to get the book value, we first have to find it by subtracting the accumulative depreciation, which is the 7,200, from the cost of the asset, which is 16,000, to give us the book value. Now we're going to find 10% of that. So it's 10 over 100. And what would be an answer be? 10% of 8,800 should land us with 880. So we can enter that information. Depreciation of oven, yes, is 880. All right, so we have completed that. We check now to see if there are any other item, any other cost that relate to the factory. Now, office equipment has nothing to do with the factory. This is a key word, office. So once we see office, we know it's going to the administrative cost. All right, salary, we have spoken to that already. Wages for delivery driver, no, we're not using that there. We're not using it here either. This has to do with the other location, administrative, advertising, electricity. So far, there are no other item that is there for the factory overhead, save the depreciation of oven. We can transfer this figure over here, so we can work with it. Since we have no more adjustments, we're going to add 0.8, and this is going to be 10. Yes, 10, and that's going to be 3. All right. So now, the question also does not have any work in progress. So this would be our cost of production. That would be our cost of production. All right. Our next move now is to prepare to do the income statement. And we're going to break right here to create a space to do the income statement. So now that we have rolled up the income statement, we are now going to move into it. As per usual, in income statement, we start with our sales figure. And our sales figure is given as 140,400. All right. We're going to less now the cost of goods sold, colon. All right, so now we're going to identify those items to go to that are part of our costs. First of all, we have also a purchase of finished goods. Right? We have a purchase of finished good. So, and we also have our manufacturing cost. So it's going to be our cost of production, and this figure, which is 53,880, and we're going to add the purchases of finished goods. All right, which is 2,700. Now let me speak to this. This purchase of finished good is likely in situations you might have run short, right? You may have a quota to fill. You have produced certain amount, and there is a small amount that needs to complete the quota of your order, and it may seem that they have purchased some finished good to put along with what they have produced to complete their quota. So that this is what it looks like. All right, or that's a possible explanation. So we're going to add these two items. All right, there is no closing stock of finished goods, there's no opening stock of finished goods. So we're simply going to add these two items based on our check. Yes, there's none, so we're going to add. We add these and we're getting 0, 8, 7, 5, 5. So it's 55,780. We're going to subtract this cost, which is this cost is our cost of goods sold, from our sales, and the answer we get will be representing our gross profit. So let's go ahead and do the math in relation to this question. So the answer is 58,620. 5,620. Okay. So we would subtract, yes, and that would have been our gross profit. Let me clear this area. And we're going to move on now to look at the expenses. So when we come to the manufacturing account, there are three groups of expenses used in the manufacturing account. First section is so we're going to less, and the first section we're using is the administrative. Administrative expense. Okay, there are three sections, as I said. Now, administrative expense are all those expenses relating to the office, right? All the expenses that is incurred in the office are treated under this heading called administrative expense. In our question, we can now move to use salary of office staff. Right here, salaries of office staff. And that now would be a total of 5,000. Yes, 5,000. How much is it? 800. All right. We also have administrative costs. So admin costs. And the administrative cost here is 195. 1,000, sorry, 950. All right. All right. Those would have been one more. Office depreciation of office equipment. So we have depre of office equipment. And they told us that it is 5%. So we find 5% of the $10,000, and 5% of $10,000 would be $500. Yes? Yes, 5% of 10 would be $500. That is 10,000 multiplied by 5. Okay? Okay? So it would be 500. So we put in the 500 over here, right? All right. Then we have another allocation referred to as our selling and distribution expense. All right, and in this area we are going to be using, wow, I have just recognized I've missed one, so I'm going to have to erase this again because we have left out electricity. They did say in the note that electricity, wow, there lies our infallibility. Yes, we should have calculated electricity of 2/3 of the kitchen to the factory. That should have been up here, and our 1/3 of the 1/3 of office should be calculated here. All right, here. So we're going to do that now. We'll do the correction. So now we recognize that they indicated that electricity, yes, for kitchen is 2/3 and for office is 1/3. We have made the adjustment to the manufacturing account. Electricity is 2/3. 2/3, yes, 2/3 of the electricity is $7,000. So the electricity cost would have been $10,500. We find 2/3 of $10,500, and that gives us $700. We're going to add those two items, factory overhead, to get this total. Then when we add the two of them, that is the factory overhead plus the prime cost, give us the cost of production of $60,080. All right. So now we are back to the administrative cost. They did say 1/3 should go to the 1/3 of the electricity should go to the office. So we're going to do 1/3 of the office, of the electricity to office. 1/3 of the 10,500 would be 3,500. All right, so we would have considered all those relevant expenses relating to the administrative expense. All right, what's the total here? Let's see if we can get the total here. That would be 0, that would be 5, yes, 10, 1927. Yes, 27, 8. Yes, 9 and 2, 11. So that would be the total 11,750 with the total administrative cost. We're not yet through. We're going to be looking at now the other areas. So we're going to shift some of these information right here to complete our work. So all right, so we have what now? This we're going to less the selling and distribution expense. All right, and the items here on the selling and distributions are those items, those costs or expenses that we incur as a result of moving the goods outside of the business. All the expenses that deals with the cost of moving the goods from our business to the customer or so on. That is what goes here under selling and distribution. So we have one item here, wages of delivery man. Right? So wages of delivery man, delivery driver. And that is 8,800. We also have other delivery costs. And other delivery cost is 2,900. And we also have advertising. Advertising cost is $400. Right? So we have those items to contend with. This one, and this one. All right? So we would add these plus this total. All right? To subtract from the gross profit to give us the net profit. Let's do that. So in completing our calculation, yes, we are going to be having a total of, when we add all of the selling and distribution expense plus the administrative expense, our total will give us 23,000. I am seeing 23,385. 23,850 rather, right? That's our total expenses. We're going to subtract this figure from our gross profit to give us our net profit, and we should be seeing, when we take that from that, it's going to be 27,770, and that is our net profit. We can double line in closing now. Okay, there you have it. The preparation of the manufacturing account and the income statement. I wish to indicate that there's another section apart from the administrative expense and the selling and distribution. There is a section that is also called financial charges. Financial charges. So in some questions, you'll have questions relating to financial charges, and that would be perhaps include your insurance, and include your bank charges. Right? Those are examples relating to the financial charges. So manufacturing, in the manufacturing account, again, there are three elements that you're using in the manufacturing account. Once you're going to be proceeding to do the manufacturing account, everything that is raw will be recorded first. So you do the adjustment to find cost of raw materials first, which is raw materials, cost of raw material consumed. Then you're going to look for your direct labor, direct wages, based on the type of business. It may be factory wages, manufacturing wages, production wages, or they may say direct wages, whichever, and your direct expenses. Those three elements are added to give you your prime cost. In this question, we have only two elements, the cost of raw material and the wages. In factory overhead, remember now that depreciation relating to plant and machinery is adjusted in the factory overhead. There are other fixed assets, yes, once they are not being used in the manufacturing part of the business, they are considered either under administrative expense or selling and distribution expense. All right. The other point I'd like to put to you in my summary is that the work in progress. So the three elements must be factored: the direct, prime cost, then indirect or factory overhead, then work in progress. When you come to the income statement, the major adjustment will be taking place around about the section of expenses, where you know identifying the relevant expenses to their cost unit or to their heading. So once the item says office, it goes to administrative expense. Any expense that's to do with the movement of the goods outside of the business, taking away from the business, all of those expenses come under what we refer to as selling and distribution. Hence, we have delivery man wages, we have advertising, we have carriage outwards, yes. Delivery van depreciation will come here under selling and distribution. All right. Salesman wages would be here. And then you have financial charges, right? Dealing with bank charges or insurance, etc. will come under financial charges. One last point I'd like to make. This very important note here. They allocate the cost of the electricity or the expense to more than one cost unit, right? So this section goes to the manufacturing and this section goes to administrative, all right, in the proportion of the expenses. Thank you very much. If there's any question, if there's anything that I have not addressed where manufacturing is concerned, please indicate to us below, and we will be ever too willing to come again and share and explain. This has been Kings and Queens accounting class, and we appreciate you listening and sharing in our class. I'm sure you will do better as we go along, because you're a king or a queen in this subject that's called accounting. God bless.